Do you ever wonder why some stocks move more wildly than others when the market shifts? The market has been shifting, and some stocks are moving way more wild than others. We're going to talk about that today when we talk about what is beta. But welcome to the Sunday Finance Church, brought to you by the Black Wealth Rebels. My name is Jimmy. My brother Corey should be here in a second. Kamari is not with us this morning, but we do have a class. Probably won't be here for a long class, but it'll be a good class, a short class. But nonetheless, we are here. Waiting for members of our village to join us here as we talk about what is beta. Something that you definitely should look for as a metric, as an investor, as well as a trader, right? So not just when you're trading on a day-to-day basis, but when you're making long-term investments, it's still important to understand what the concept of beta means and what is beta. For those folks who are here, let me always say, my brother Don's in the building. What's up, Don? Don, how are you, man? Listen, man, Kamari won't be here this morning, but Corey should be here in a couple seconds. By the way, I was hanging out with Kamari last night, man. Let me tell y'all about this dog, man. So we went to a show last night, and this dude tells me, he says, yo, I need you to be there at 6:30. So obviously I wasn't going to be there at 6:30 because he's late to everything. So he's late to everything. So I said, I'm not going to be there at 6:30. So I didn't even leave my house to 6:30. We went to see Eric Roberson. So it was myself, my wife, him and his wife. We went to see Eric Roberson. So I get there, I get downtown about 6:45. It's like 7:20. By the way, the show starts at 7:30. He's still not there. Dude got there. I also want to put this on the record. So when he comes back and watches this, he sees me telling the truth. He got there at 7:27 for a 7:30 show. Yo, he's out of control. Completely out of control. But that's not what we're here to talk about today. We are here to talk about beta. Let me share this out with everyone in the village so we can get our folks here. But all right, so what's up, man? My man Don is out here living good, man. That's what's up, Don. Hey, listen, man. That's all you can do, good brother. That's all you can do, man. What you buying these days, Don, though? I love to know what you buying. You buy anything new these days? For those who don't know, Don gets busy on the investment side. He's we call him V-Don because he believes in, a lot of the ETFs. So that's how he got the nickname V-Don. But I love to know what you buying these days, Don, because, Don gets busy. And for everybody else here, I see a number of folks here. Pull it up. Let me know who's here. I'm going to get into the presentation in a second. I know Corey told me he was jumping on. Even if he doesn't, I'm going to get into this presentation because I do have a presentation that I put together, and I promise you I will be sharing it because I didn't do it, just for the sake of doing it. But I want to see who else is here, man. A number of folks are here. Please let me know who's here. I want to know who's here with us. Here we go. Now I'm going to share this out to the village. What you buying these days, Don? What you buying? You buying any new ETFs, or you still just stacking the same things that you've been stacking, for the longest period of time? All right, got it. It's taking me a second to type. I just got a new phone, and this new phone is crazy, so it's taking me a second to type. But with that being said, let me get into this presentation, man. I don't even want to belabor the point. So who we got here? We got Jay Sims here. Jay Sims says, yes, right. Yeah, you'll get whatever gonna happen. Y'all gonna get this presentation. I definitely did. I definitely, put it together. So it's going down. It's going down. Don said, open a few positions in Duke Energy, Costco, and SMH. Interesting. It's interesting you say that, right? To be honest, I don't own any stock in Costco. Outside of Costco is a member of Top T, and everybody knows Top T is like my favorite holding in the stock market. So Costco is a part of Top T. And for those who don't know what Top T is, Top T are the top 20 companies in the S&P 500. And it's probably one of my favorite holdings is Top T. So I have exposure to Costco that way. But I'm bringing this up because no matter what metric I use, and we're going to talk about, a metric this morning. We're going to talk about beta. But no matter what metric I use, the different analysis that I use, Costco always pops up on all these various screeners, all these different formulas and models I put together. They always pop up as a top company. They pop up more than other companies that people would assume would pop up, right? Like the Microsoft, the Apples. No, Costco, no matter what metric I use, and that's what makes it interesting, right? So they are a very well-run company. I'm saying all that to say, so why won't you buy stock in Costco? I got exposure through Top T. I don't like to buy a lot of individual companies per se. So I'll just keep my exposure through Top T, but I think it's interesting that you brought up that Duke Energy I haven't really looked into. I understand what you're going to do with SMH, that's the chips and all that. So I get it. But it's interesting that you took a position in Costco because Don is also someone who specializes in ETFs, right? Getting a basket of companies as opposed to buying one specific company. So there's something that you must have saw in Costco too for you to open up a individual position in Costco. And Duke Energy, what was it about? If you don't mind me asking, what is it about Duke Energy? Yeah, that's also interesting. Jason says that Costco is known for treating its customers and employees well, right? And sometimes in business, people feel like they have to squeeze every penny out of their customers and just work their employees to the bone. And everything that you read about Costco, never worked there, don't know what it's like. I haven't even been to Costco that many times. I've been to Costco like one time. I'm a Sam's Club boy, just because there's no Costco close to me. But matter of fact, I need to find what is the closest Costco to me. But anyway, but anything you read about Costco, it talks about how it's always one of the best places to work. Their customers love Costco, and but their numbers are amazing as well. So interesting, man. It's always interesting to see because everybody like flocks to tech. But there are still a lot of solid companies that have great books that are not in the tech sector. So don't sleep on companies not in the tech sector, right? Because everybody is so enamored with these tech companies that we're missing out on a lot of great investment opportunities by just focusing on tech all day long. Good morning, Lorraine. How are you? Good morning. Hope all is well. Let me put this on the page real quick, and then I'm going to jump into the presentation. I don't know where Corey is, but it's all good because I'm going to start. And, like I said, y'all going to get this work because I put the work into making it. Let me see. All right. So what did Don say here? Don says Duke was more of an energy dividend play. Okay. All right. And I'm glad you said that because part of what we're going to talk about today is various type of plays as we talk about what is beta, because that's what it's about. Adrian, what's up, Adrian? How are you? Good morning. All right, I'm going to get started. And if Corey jumps on, he jumps on. If not, don't matter. Y'all can get this work anyway. But I do want to talk about what is beta. So let me get the presentation started. So what I want to talk about is understanding beta. And this is investing as well as trading, right? So the question is, do you ever wonder why some stocks move more widely than others when the market shifts? Because when the market shifts, you'll have some companies that are just drastically going up or down, whatever that may be, depending upon what the shift in the market is. Beta is the key to understanding this relationship. This measures how a stock moves compared to the overall market. And this fundamental concept helps investors manage risk and build more effective portfolios. So the thing about it is, as I said already, this can be used not just for someone trading. Traders look at beta, but also someone with long-term investment decisions that they have to make. Because when you're building a portfolio, as Don just talked about him buying Duke Energy as a dividend play, right? When you're building a portfolio, you're looking for different things within your different holdings. If I am buying like a high-flying tech company, I'm looking for one thing versus buying something that's stable with more of a dividend play, right? What's interesting about this is yesterday was the last day of our 2025 Buy the Hood ownership camp, this was our best camp that we've ever done. It was our 11th camp overall, but this was our best camp we've ever done. But one of the things that we do during the camp is week one, we talk to the students and we ask them about their favorite companies and, companies that they would want to invest in, because those are always two different answers, like their favorite company. Then when you ask them about companies they want to invest in, they're thinking about not what's my favorite, but what makes money, right? And then after we go through the 5 weeks and they get all the lessons, they learn about the stock market, they learn about real estate, they learn about budgeting, they learn about credit, they learn all these things. On the last day, we asked them the same question to see if it changed, if there's any sort of shift in the companies that they would have picked from week one. And it's always a shift because now they have more information, they have more data. Some people want to get dividends. But one of the more interesting things is the idea of buying something that has a lot of growth left versus something that's stable, but you just want to, because you're so conservative, you're so worried about losing money that, you want to buy something more conservative. And sometimes it's not even about the dividend. It's just about that fear of loss is so great that you don't want to take the risk, but with higher risk comes higher reward, right? It's still based on data, still based on research. So this is why it's important to understand what beta is, right? Because beta will tell you how that company will fluctuate. And depending upon what you're looking for, that can be very important. So Dina says, just started a position in XLV. Figured there may not be much more downside. Nibbling on it for now. Okay, all right, that's dope, right? So that's another ETF out there for those who don't know. Another basket. So let's see what XLV is trading for now. And let's see. And for those who don't know, XLV is the healthcare, right? So she's buying the entire sector of healthcare. All right, 131. Okay, nice. All right, so XLV is a nice play. I know J&J is one of the bigger holdings in XLV, but let's keep it moving with the presentation, about beta. So what is beta? Beta is a numerical value. It indicates a stock's volatility relative to the market. So most of the time we use the S&P 500 as a gauge of which way the market is moving. The market itself, right? So S&P, the market itself has a beta of 1.0. So that's our baseline. Anytime that we're looking at beta, the baseline is always 1.0. And that 1.0 is represented by the S&P 500. So this measurement helps investors understand how much a particular security might move in relation to the S&P 500 or the broader market. So this is critical insight for, constructing your portfolio. So the actual mathematical formula for this is beta is the covariance, right? Divided by variance. So the thing about a covariance, right, is this is just a statistical measure that indicates the extent of how two random variables move together. It's something that we use in statistics to see how two random variables move with each other. So we're looking at the overall market and how it's moving versus the specific security that you're taking. That's how we figure out what beta is. The good thing is you don't have to remember the formula. You don't have to run any numbers. You can literally go to Yahoo Finance and it will give you the beta for any company that's there. And it's right on the home screen. As soon as you put a ticker, matter of fact, I'll show you by the time I finish this presentation. If you put a ticker in Yahoo Finance, it will literally just give you the beta. So it's not like you have to do any sort of mathematics. But if you are someone, if you're a nerd like me and you're into that kind of thing, here is the formula to figure out what the beta would be for a specific company. It's the covariance divided by the variance, right? So with that being said, though, let's talk about how to interpret the beta values. And again, remember, 1 is the benchmark. So if your beta is 1, that means that specific stock moves in line with the market. So many large cap stocks that have established business models, they will move kind of with the S&P 500. So some of those you'll find at 1. Now, if it's greater than 1, that means that the stock is more volatile than the market. That means it's higher risk, but also potentially higher reward. A lot of times you'll find this within the tech sector, as well as big growth companies, right? And what's interesting about watching this play out is Apple used to have a crazy beta, but over time, as they become more established and they become not the super high tech growth company, but the more established company, what you'll see their beta decreasing, making this one closer to 1. It's still above 1, obviously, but it gets closer and closer to 1 as time goes on and they become a more established company. Does that mean there's not a lot of growth left in Apple? Only time will tell. I don't try to predict things like that, but they're not growing as fast as they once were, which is why the beta is decreasing. Now, if you have a beta that's less than 1, that means that the stock is less volatile than the market. It's more stable, and a lot of times those are defensive plays. When you see people buy things like utilities, right, or consumer staples, or something like a Duke Energy, right? I don't know what Duke Energy's beta is, but I would just without even looking, I would say that it's probably less than 1, or maybe slightly above 1, but I would say that it's probably less than 1. And I can look at that when we finish this PowerPoint. But if you have a beta that's less than 0, that means the stock moves opposite the market direction. So this is often found in hedging assets. So something like that will be like a gold mining stock or an inverse ETF, where it will be less than less than 0, for example. So sometimes you'll find things that are less than 1 that are stable, but if it's less than 0, that means that it's going the opposite direction of the market. So a lot of for majority of our lifetime, that has been gold. People use gold as a safe haven. So when the market is falling down, gold will then have an inverse relationship to the market. So that's represented on the stock market by GLD, as well as maybe some gold mining stocks. People will buy the mining stocks as a play for gold as well. But historically speaking, that has been what people use to kind of hedge their portfolios against the market. But what I find interesting are the companies that are less than 1. They're above 0, but less than 1. Because those companies are the companies that tend to pay a higher dividend. They tend to be more established companies. Like I said, a lot of those consumer staple companies that you'll find in that specific realm. So with that being said, let's keep it moving. Like I said, I'm not going to be here long, but I do want to make sure that I give a good representation of what beta is. So you can use this as risk assessment. So this will help gauge potential price swings and volatility, allowing investors to match investments with their risk tolerance, right? Everybody has a different risk tolerance. So this is why it's important to understand who you are as an investor as well as a trader, because just because your cousin or even someone like me, you see talk about what they buy, doesn't mean that you should buy it. You have to understand your risk tolerance. Some people cannot stand to have something drop, right? It really bothers them to their soul. I've had investments drop 60%. Listen, I had Bitcoin drop from 60 to like 20 on me. Didn't matter. I just kept buying, right? Because I believed in my analysis and I believe in data. Some people can't stand that. They get physically sick. I've seen it. People get physically sick. I remember back in '08 when the market was like tanking. I listen, I'll tell you a true story. I knew someone who I admired, one of the mentors in the market. I thought he was going to jump out of a window, right? He was, almost lost his family, his house, everything. So he was going through it. So the thing about it is people have a different emotional response to watching their stock go up and down, right? So a lot of times when the market is booming, and we've been in a crazy bull market for those who don't know, this is time frame I'm giving is over the last 10, 15 years. Everyone is excited when the market goes up. That's the other thing about beta, which is very interesting to me as well, right? Because you see a lot of the things that happen, say on Wall Street bets and people chasing these meme stocks, all those things have crazy high beta. Those things are cool when everything's going up. But to me, what makes a great investor isn't someone who's able to make money when the market goes up. What makes a great investor to me is what do you do when the market goes sideways or when the market falls, right? And I know a lot of people who got into investing over the pandemic and they're not even into investing anymore. Now they I go on their timeline and they're in the church now. Like they've got completely away from it because everything's not going straight up like the way it was during the pandemic. So the fact is, when you look at someone who can be in this game for a long period of time, build wealth for their families, they have to understand what their specific risk profile looks like, right? Even with me and Corey, we have different risk profiles. He's willing to take risks that I just won't take, right? Because I want to have some sort of balance. So expected returns. If you have a high beta, that means higher potential returns during bull markets, but bigger losses during downturns. And you have to understand that. So when you're looking at the beta of a company, you say, okay, if the market is going one way, I'm going to make this, but just be careful in understanding that if it goes the other way, you can lose more, right? And what tends to happen is you'll lose faster than you gain. So portfolio construction, right? This enables strategic balancing of high beta and low beta stocks to manage an overall portfolio. My brother Don was in the chat. As we were talking, he was talking about the various companies that he's buying. And, Don knows what he's doing. So him constructing a portfolio, he said he bought Duke Energy for a specific reason. He's balancing it out. So the Duke Energy will have a different beta than other things that are already in this portfolio. I know Don is big on tech with VGT, but the fact is that's how you balance out your portfolio. It's also can be used as a comparison point. So if you want to have a standardized metric for evaluating relatively, risk before making a decision, you can use the beta. Also, if you're someone that's in the trading, whether that be a swing trade, leap trade, day trade, you want to have volatility. You don't want to make a trade on something that's not volatile, because if it's not volatile, you can't make no chicken. You know what I mean? That's just what it really boils down to. So what are the limitations of beta? So beta has a past performance bias. All of these metrics that we talk about are great. They're great, but they're not to be used in a vacuum. And the reason you can't use them in a vacuum is because they all have some sort of bias. So beta is calculated using historical data and may not accurately predict future market relationships. Markets evolve and historical correlations can break down during periods of significant change. Let's just say, for argument's sake, you have a company that has low beta, an energy company or whatever, and they discover a whole new energy source. I'm pretty sure they will boom. But all we have are, past results, but they cannot predict the future. By the way, anything I say here, by the way, is not investment advice. It's for educational and informational purposes only. We're just talking right now about what is beta. So beta also doesn't measure all risk. Beta ignores company-specific risk, industry disruptions, regulatory challenges, black swan events. So it doesn't look at every metric. Because, again, things can just pop up, right? Things pop up. Like, we live in a real world where things happen with companies because companies are run by people. And because Corey always says people are going to people. So things happen, right? If I was looking at the beta of Enron, I didn't know that Enron was scamming. So what good would the beta have done to me? Which is why, again, all of these various things that we talk about when it comes to fundamental analysis and or technical analysis should not be used in a vacuum and be used as part of an overall analysis of a company, right? So the dynamic nature, a stock's beta can change over time as the company matures. The company may alter its business model, or as market conditions evolve. What was once a high-risk stock may become more stable as it grows, right? I talked about watching Apple, right? Watching Apple is something that's been interesting to me over my lifetime, because I remember Apple was the startup, well, not necessarily a startup, but they had that startup energy. It was more about the creatives. They used to run those commercials like the Apple versus Windows, right? And now Apple has kind of become, what they made fun of. They are the big boy in the room, so to speak, for lack of a better term. And pause that, because talk about big boys in rooms and whatnot. So with that being said, here's some real world examples of beta, right? So again, remember, our baseline is 1. Our baseline is 1. So if you have a 1 as a company, that means you move in line with, say, the S&P 500. Let's look at Tesla. Tesla is more than 2 times as volatile. Tesla, and this numbers, by the way, I updated these numbers. When I wrote this presentation a little while ago, the numbers were a little bit, actually, Coke was a little bit higher, and Tesla was also. So they changed a little bit, but still, they're still more than 2 times higher than market, which means they are extremely volatile, which is why Tesla is one of those stocks that people love to trade, because it's so volatile. There is a lot of money to be made by trading Tesla, whether that's up or down, right? Whatever your analysis tells you. But they are extremely volatile, way more volatile than the overall market. On the flip side, Coca-Cola is less than 1. It's not as volatile as the market at all. It's a company that's matured. I mean, to me, Coca-Cola is damn near like a bond. It's not a bond, but the reason I say it's damn like a bond is because it's not going to go but so far, right? It's not going to go but so far up, so far down. It's pretty stable. It's a stable investment. It does pay a dividend. A lot of people invest in Coca-Cola for said dividend, and also just because it's stable. They don't want to have the risk of losing money. So if I don't want to have the risk of losing money, would I rather put my money in Tesla or Coca-Cola, right? If I'm conservative, I'm going to the Coca-Cola side with a beta of 0.45, which is less than 1. Now, if I got more of a YOLO spirit and I'm trying to run the bag to the moon, I'm going to go with Tesla because I'm looking at that volatility. It's not saying that one thing is right and one thing is wrong, but you have to know your specific risk profile as an investor and or trader. Are you someone that doesn't mind risk? Or are you someone that risk, prevents you from sleeping at night? Or for what some people do, some people take a balanced approach. Give me a little bit of Tesla, a little bit of Coca-Cola, and those things will help balance each other out. I know I'm not going to get the crazy returns from the Coca-Cola, but I'll get that from Tesla. And I know when Tesla is going the opposite, that Coca-Cola is going to be more stable for me. That's why beta is also used as a way to build a portfolio overall. But then as a trader, I may not buy options plays on Coca-Cola, because what am I really going to do? I need something with some beta that's going to move. That is part of, what happens, right? So that is the difference. More folks pulling in. What's up, Darren? Darren, how are you? Appreciate you pulling up. Anthony's also in the building. What's up, Ant? You know what I'm saying? So getting back to beta, the last thing I want to talk about is this, right? Beta is a risk thermometer. It serves as a temperature gauge for your investment. So it helps you understand potential volatility before committing capital. So before you put your money out, understand how you're putting your money out and what you're putting your money out for. It also helps to balance a portfolio. So you can use beta to build a balanced portfolio that aligns with your specific risk tolerance and time horizon. Time horizon is also important, right? Understanding your time horizon. If I'm younger, maybe I want to have things, right, with a higher beta because I have more time to regain if the market shifts. But I also want to be in super growth mode if I'm a lot younger. So my portfolio at 21 is not going to be the same as my portfolio at 61. So as I approach retirement age, or I'm getting up there, what have you, because retirement, by the way, is not an age, it's a number, but I digress. The thing is, if I'm getting older, I may want lower beta because I don't want to I don't have the time to rebuild, with those market swings. So I'll probably be more into the Coca-Colas of the world, the Duke Energies of the world, those kind of things with a lower beta, because I'm looking at preserving capital just as much as I'm looking to grow. But I'm also probably going to be more in some dividend plays. Because, by the way, companies that pay a dividend tend to have a lower beta, right? Because most of the time when a company pays a dividend, they're a more mature company that's more stable, and based on their balance sheet, they're able to pay a dividend. If they're not mature and not stable and they're paying a dividend, that could be a red flag too, by the way. So again, balancing your portfolio. We already talked about that ad nauseum, so I'm not going to really jump into that, but it's just one piece of the puzzle. So while valuable, Beta should be one of the many tools in your investment analysis toolkit, not the sole decision maker. So understanding beta helps you anticipate how your investments might perform in, different markets. The thing is, if you're a member of the village, and if you're not a member of the village, please join the village by going to blackwealthrebels.com, and you go into the section specifically for our folks that are paid members. If you go into the section that says Options 101, we went over a lot of the different pieces of fundamental analysis. There are also some on technical analysis, and that's something that we're building up over time. So we'll pretty much hit every metric eventually, and give different strategies, give different screeners and things of that nature, because you don't want to use, in a vacuum. Now, you also don't want to be someone who's looking at 11 different things. You want to figure out what are the certain things that work for you as a trader and or investor, and this is the model that I'll create. My model might be a little bit of beta, like it might be a little bit of, charting and looking at the candles. It could be a couple of things. I don't want to have, look like I'm launching rockets. I open my computer and I got, 75,000 different metrics that I'm looking at. But depending upon what you're also doing, you can be using different metrics. If I'm trading, I definitely want to know the beta, because I'm not trying to waste my time trading something that's moving like a snail. I just don't want to do that. It's a waste of time, because again, time is a variable in every model that you use when it comes to finance. Core finally got on. What's up, Core?
Yo, it was really good.
You all right, bro? I mean, listen, I'm done the PowerPoint at this point. You know what I'm saying? Like, I was out here cooking, man. I was out here, looking like Corey back in '93 when me and Corey played ball. And Corey was a super gunner. For those who don't know, me and Corey played high school basketball together, and Corey was an extreme gunner, yo. I'm letting y'all know. Y'all see Corey on the screen, and Corey be all reserved and quiet. Corey was the dude on the team who was the black hole. You pass the ball to Corey, it's not coming back.
Never. Ain't nobody can get to the bucket like I can, man. My fault. Nobody. I'm getting buckets.
Corey said wins and losses is based on points, not rebounds. Who cares how many rebounds you got? I'm letting this thing fly. Anyway, so so I was basically just going over beta, man, and the importance of beta. So what I'm gonna do now, though, I'm gonna pull the PowerPoint down for a second. I want to look at a couple of different betas. I'm gonna pull it up on Yahoo Finance and talk about how, although I gave you the formula, and for those who don't remember the formula, if you want to get into some real nerdy type stuff, that's the formula right there. The covariance of the stock market divided by the variance of the market. That's the formula. But we're in 2025, right? And we're blessed to be in 2025. So let me show you what you can do these days. Makes it a lot easier, right? Let's go. Hold on one second. Let me pull this up. Let me pull up Yahoo Finance. I got Tesla pulled up right now. You know what I'm saying? So here's Tesla, right? So now if I scroll down, literally, boom, there's the beta. It's giving you the beta right on the screen. You don't even have to do a bunch of work for it. So let's look at something like Duke Energy, right? Let's see. Don was talking about Duke Energy. What is Duke Energy's beta? 0.35, just as I suspected, less than 1, right? It's a more stable company. So it's not going to have that fluctuation that something else would. But here's what it also has too. That dividend. It got that nice little dividend right there. You know what I'm saying? Which is what Don said, right? It's how Don knows what he's talking about. Don said, I did this as a dividend play. Now, Core, what is something that you think is also very volatile?
Look at Riot.
Ooh, let's see. Riot. 4.58. So for those who remember, our benchmark is 1. Tesla is 2.4. Riot is 4.58. So that gives you an indication of, you talk about volatility. There's some volatility for your A. You know what I'm saying? There's some volatility right there. 4.5. 4.58 is the volatility. Now, again, this is just telling you how things move, right? What is the volatility of that holding? What is the volatility of that holding? Again, gold, low beta, right, is less volatile than the market. I got one. Just look at this bad boy right here. Let's look at Palantir. 2.59. Palantir is more volatile than Tesla right now. Tesla's 2.4. Palantir is 2.59. So that right there is the great part about, like, we're in 2025. You don't have to do all the math. You can just go right to Yahoo Finance, get the beta, and then you know whether that's something that you want to trade. And then here's what I want you guys to do for those that have built the portfolio. Go through your portfolio and look at all your individual stock holdings. Go look at the beta. And some of y'all going to be shocked because some of y'all going to have nothing but stuff that starts at a 2, which means y'all got that YOLO spirit. Y'all have no balance in your portfolio. You have nothing that's going to ride the wave if things start to, go crazy. You got all Teslas. You got all Riots. You got all Palantirs. You super teched out. You know what I mean? And that's how a lot of folks' portfolio has been over the last decade and a half because we've been booming. So folks are riding the wave. But the thing is, it starts to get, I was about to make I was about to use an analogy that I don't want to use. I ain't trying to be disrespectful, but the fact is, you got to be careful when the waves start to get real crazy. And sometimes that balance of having a Coca-Cola or a Duke Energy. What's my favorite other joint too, man? I like Exelon, man. Let's look up Exelon. What was it? EX. What's Exelon's joint core?
EXE, I think.
EXE. No, that's not. Here it is. EXC.
EXC.
I'm just interested in Exelon because for those who don't know, Exelon here in Philadelphia, they run our energy company, right? There's the beta there, 0.47, less than 1. But what they also got that divvy. They got that divvy.
Look at Procter and Gamble.
It's funny. Me and Corey was talking about this yesterday when he was talking about the one company he would buy. I'm like, I don't know what we squeezing out of there. Beta is 0.40. So again, Procter and Gamble is it's stable. But again, it's like buying a bond. I may not make a lot of bread. My bread gonna be safe though, and I'm gonna kick off this income. So it's not to say that anything is bad or anything is good. It's just to say that there's different types of investments. So just understand that there are different types of investments as you're investing, man. So that's kind of what beta can be used for. Anybody got any questions, thoughts, concerns, or anything in the chat? Or what is a beta that would shock you? Or what's a beta that you'd be interested in? Here's the one I want to talk about. I talked about it during the presentation because historically, their beta has just been getting closer and closer to 1. Right now, Apple is at 1.2. Apple used to have a beta over 2. But as Apple matures as a company, you can see it in the company's culture. You can see it in how the companies run. I mean, listen, I got a new phone yesterday, Core, right? And I'm laughing because I'm looking at my iPhone. I'm like, yo, and I got the newest iPhone. I got the 16 Pro Max, right? So let me show you my phone real fast, Corey. Let me show you how drawn this is, right? So I got the Fold 7, right? Look how thin this joint is. I'm gonna give you an example. So here is the iPhone 16 Pro Max here, right? Look at the difference in this. It's actually thinner, right? The Fold 7 is thinner. Another comparison point is the S24 Ultra, right? And it's literally thinner. Now, what makes that interesting that it's thinner, and yes, I'm going somewhere with this, y'all. What makes it interesting that it's thinner is not just this, it's the fact that I can open up to a 8-inch tablet. It's 8 inches now, pause. They made it bigger. So it's thinner than all the other flagship phones that open up to a tablet. Now, why do I say that? Because I was looking at my iPhone, I was like, this is crazy that they were able, this is like a marvel of technology. I don't even know how they did this. But I'm looking at my iPhone and I'm like kicking it like a rock, like do something. It's the same thing every year, right? The MacBooks don't really change that much. The iPads don't change that much. The company doesn't really innovate the way they once did. But when they were innovating and doing all kinds of crazy things, their beta, right, was at a higher place. They were growth. They're more of a stable company now. It's crazy to look at Apple as being the stable company. Because I was talking about this during the presentation. Remember back in the day where Apple made fun of all the mature companies where they would have those I'm a Mac, this is a PC. It's right. They've become that. Yeah, it's not a bad thing overall, though, right? Because in the process of them becoming that, they created a lot of value for the world and made a lot of people wealthy. But it's also a good thing. You know why it's a good thing too? Because some companies don't last long enough to become a mature company. A lot of companies aren't able to make it to that point. And again, there's still, to me personally, I still think there's value in Apple because Apple is a religion. But getting to the beta idea of looking at the beta, you can watch that beta go closer to 1 as time goes on. So, a lot of the companies that were back in the day, the high flying tech companies, like Google is almost a mature company. Let's look at Google's beta real fast and see what Google's beta is. And, then we'll come back and check this in the future video. But Google right now, let's see Google. Look at this beta, yo. 1. On the nose. Google's beta is 1. Ain't that crazy?
It's not though, because
Yo,
you're gonna see that the established companies are closer.
No, I get it, but I'm saying the fact that now Google is a company that's a quote unquote established company, right? We came up in a time where Facebook, Google, Amazon, these were like the super growth disruptive companies. And now they're like it's almost like you grow up and you're like, yo, when you get out in the street court and people are like, what's up, Unc? And you're like, hold up.
Damn, when I become Unc, and then look around like, damn, I am. Like,
so that's our analogy. Amazon, Google, Apple, they Unc now. You know what I'm saying? They're not outside like they used to be. They Unc age. But it's interesting to watch a company mature to be that. Again, I think it's also a positive and a powerful thing that they are around to mature, because there are other companies.
You know why their beta is going toward one though, right? Because they're in all of the ETFs. Mm-hmm. And so when you get into
that's part of the maturity. That's part of the maturity.
And so what happens is you become the standard. So when you move, the market moves. So it really is saying that you are the market mover when you are at one ish. You know what I mean? Because
you're part of it, right? Because we have other ones that are in ETFs as well. Like Tesla's in a gang of ETFs too, right? But Tesla is still so volatile that
because homeboy is wild. So it's kind of hard for them to stabilize.
So it's just that these are becoming the mature companies, which is a beautiful thing to watch. But like they full Unc status now, man. You know, they've graduated. You know what I'm saying? They've graduated to to sweatpants and track sneaks. Like this is where they at.
That's where they at with it.
Google is Unc status, man. So you know what I mean? That's kind of what beta is, y'all. And you know, shout to Don for like, you know, giving us an example when we started. Corey, I know you missed that. Don was talking about his new holdings. I'll pull it back up. He said he got Duke Energy, Costco, and SMH is the newest things he's been buying. And he was explaining to us that the Duke was more of an energy / dividend play. And that's why I was using that as an example when you talk about something with the lower beta, but it still doesn't mean it's a bad investment. It's just that Don is building a portfolio. So Don knows what he's doing. And, you know, one way is to use Duke Energy as a dividend and energy play. So, again, every Sunday we come with a class and we talk about the various parts of the market. Today was about beta, and we just wanted to give you guys an idea of what beta is, how to use beta. If you have any questions, please let us know. And by the way, if you're not a member of the village, you got to get in the village because, I mean, actually, it's going to be more activity. We have a general chat in the village now. We're just going to talk about pretty much any and everything, right? And that's blackwealthrebels.com. Maybe I can go in there and tell y'all the story of I didn't tell you, Corey, because Corey just pulled up, man. You man Kamari wild, bro. So last night, right, you know, we went to the Eric Roberson show, right?
Yeah.
So he tells me, right, it's at City Winery downtown, right? I'm not too far from downtown. So I said, look, just tell me what time you want to meet up there, right? Be there at 6:30. The show starts at 7:30, but we can go sit down, get a grub, blah, blah, blah. So I told my wife, I was like, I ain't going to no 6:30 because Kamari's not going to be there at 6:30. You know, she's like, no, but he said 6:30, so be there. He's not going to be there at 6:30. So I didn't leave my house a little bit after 6:30, right?
Mm-hmm.
I get down there, 7 o'clock. He ain't there yet, bro. Show starts 7:30. He came in the joint at 7:27. Mind you, he got the tickets, by the way. 7:27. Yeah. So I'm just putting that on the record. You know what I mean? So when he watches back, he sees that, you know, I'm letting the world know that he's late to everything. You know what I mean?
Well, he wasn't late. He just wasn't early.
No, he told me 6:30. So he was late. His own time. 7:27. But as an aside, though, the show was amazing. Yo, Eric Roberson is fire, bro. I got to give him that. You know what I'm saying? That's his guy. It wasn't my guy. So I tell him he was right, because you ever go to, especially like, you know, we love R&B too, right? So you ever go to an R&B show, right? And you hear the person singing, you like, you don't sound like that in the car. When I put the music on, you don't sound like that. You sound terrible.
Your studio engineers is the
Boy, low key might have sounded better in person than he did. Like I was blown.
That's how I feel. See, that's how I feel about a few people, man. That's Fantasia and
Fantasia. I saw Fantasia live. She's ridiculous.
Yeah, man. Like it's a few people like in person when you hear them sing, you be like, man, I see like how you got that contract.
Listen. One of the greatest voices I've ever heard live, right? To the point where I was like, she might not be human, yo. I heard Jennifer. I was at Jennifer Hudson's show. Jennifer Hudson
is another one. She
I was
is
like,
another one.
Her voice.
It don't even seem real that she
it's like
you
shouldn't be able to do that. With that what you're doing, you shouldn't be able to do that, right? But no, but he was phenomenal, man. So I give him credit for that because the show was phenomenal, but he still was late. With that being said, though, y'all stay in tune, man. Listen, I also want to send a shout out to everybody who helped make the camp possible. I'll be shouting y'all out for the rest of the week because like our 11th camp was our best camp yet, and what we're building in the future is only going to get better. We have a Saturday, like mentorship / just finance camp. Like we're going to do one Saturday every month. Trying to figure out when we're going to start it, October, November, but one Saturday, the first Saturday of every month, we'll be in the community, and we're going to do a class and we're going to, play Monopoly.
We're going to be touching grass, man.
Yeah. So yesterday was a crazy busy day. After our camp, we were actually in the community yesterday, at a church event, like speaking to the people, and I was laughing because Corey was talking to people and looking around. He was like, "Yeah, this is different than the internet. Like you get out and meet the people, and people be out here struggling." He's like, "On the internet, everybody got money, but when you get out in the real world, it's a whole different ball game, dog." So we got to spend more time out with the folks. So Saturday school is what we're calling it. It will be coming soon. So stay on the lookout for that. For those that helped make the camp a possibility, I want to say thank you again. We love you guys because we got more donations this year than probably any other year. And it helped. It helped us pay for the facility. We paid for catering. The kids won prizes literally every week. Like there are kids that walked out after the camp with a couple $100 to start their investment portfolio just based upon the generosity of our village. So I want to say thank you to all you guys. You made it possible, and you changed lives. I got messages yesterday from parents who like, yo, my kid won't stop talking about what they want to invest in. So now they're having the conversation about with their kids about investing, and that's transformational. Like it's different. It's just different. The one father hit me up. He's like, yo, all my kid want to do is buy Roblox stock now. We went from wanting to play Roblox to now he want to buy the stock because he went through the 5 weeks of the camp. And I'm like, that's what the camp is about. You know what I'm saying? So, and we couldn't do it without you guys. So I want to say thank you to each and every one of you. Shout out to all y'all, man, because you guys have been very generous, man. We got donations. Like I think the biggest donation, we got multiple people that did it though, 500. And I think the lowest one was like $5. And we appreciate all of
it. All of us do the same. Yeah. Like it's not the same, but it all went to the same place. Like
man. So that was dope, man. So I want to say thank you to everybody for that. Again, the camp has been amazing, and now we're taking it a step further with the Saturday school. So and we'll continue to build in the community. We have another community event for the adults, by the way, that should be coming up. We're looking at October 2 as well for our next cash mob. So one of the other things that we do in the community is we do a cash mob and a pod class where we go to a Black-owned business. We bring new customers to that business to introduce to a business they may never heard of. We do a live podcast recording. So we've done a number of those as well. Well, we've done 2 of those where we recorded a podcast. We've done cash mobs, but now we've added the pod class to it. So that's the other community work we do. So we got the thing for the youth and the thing for the adults, and we'll continue to have that happen. We want to say thank you, but we'll be back here on Wednesday for Wealthy Wednesdays, Friday, Freedom Fridays, and a Bitcoin giveaway every Friday. So pull up for that as well. And next Sunday, we're back here for another finance church. Have no idea what we're talking about. I know that Jamil's been asking us to do a REIT versus the actual real estate. And now that the camp is over, I'll have time to like write it out because I create these presentations and, I want to put some time into it. Don't want to just, half-ass. So shout out to Jamil. I'm going to work on that as being one of the next things that we do talk about REIT versus, physical real estate and the difference between the two and which one is actually better because you'll be surprised at my answer. Maybe you won't. With that being said, we love you guys. We appreciate you guys. Please stay safe out there. Any questions, hit us up, blackwealthrebels@gmail.com. If you're not a member of the village, join the village. More content dropping there. And the village is blackwealthrebels.com. So please go join the village. We love you guys. Stay safe. Black Queens forever.